Do you know that Warren Buffett's company, known as Berkshire, has an investment portfolio? And about 40% of its value is in just one stock. Berkshire's Apple stock is worth about $128 billion. So, why does Buffett love Apple so much? Well, there are a few reasons Apple is Berkshire's largest holding. And to find out, keep on watching this video till the end. But before we begin, subscribe to the channel and turn on the bell icon so you never miss out on our latest uploads. Now, let's get started with today's video. Consistent and predictable financials. Apple has one of the world's most resilient businesses, which is helping it thrive today. While several large IT firms have lately reported lower than expected quarterly results due to a variety of macro and company-specific challenges, Apple was blazing on all cylinders in its most recent quarter. The company's $97.3 billion in total sales increased 8.6% year-over-year, beating Wall Street predictions by 3.5%, while its $1.52 profits per share finished 6.3% above consensus forecasts. While the company's core product division, which includes the iPhone, iPad, Mac, wearables, home, and accessories, grew by 6.6%. It was the company's services section that grew by the most. The services sector increased by 17% to a record $19.8 billion, acting as the key driver of growth with both high growth and high profitability. These strong results reflect the effect of our sustained investment in strengthening and extending our services portfolio, as well as the good momentum we're experiencing on many fronts, said CFO Luca Maestri during the quarterly conference call. The App Store, iTunes, Apple Pay, iCloud, and Apple Care are all part of the services section. Analysts predict a top line of $394.2 billion and earnings of $6.15 per share for the entire fiscal year 2022, representing 8% and 10% year-on-year growth, respectively. Apple's successful product line and expanding services division position the technological behemoth well. The ability to generate cash. Buffett once said, "Cash is to a business as oxygen is to an individual." Apple certainly embodies that. The company has a cash position of $28.1 billion and is practically a money printing machine. In the past 12 months, it generated $105.8 billion in free cash flow, FCF, and the 3-year levered FCF compound annual growth rate is 13%. A large cash position is advantageous for a variety of reasons. For starters, it allows a corporation to satisfy all of its obligations while also providing security in the event of unanticipated economic occurrences. It also allows the corporation to reward shareholders through dividends and stock buybacks, as well as reinvest in the business. Apple's board of directors recently approved a 5% increase in its quarterly dividend, up to $0.23 per share. The stock now yields less than 1%, as well as a $90 billion increase in the company's share repurchase plan. In summary, a large cash position provides maximum stability and financial flexibility, which are two essential characteristics that Buffett looks for in a stock. A wide economic moat and brand recognition. Brand power is frequently a crucial driver of a company's success. According to Forbes, Apple is the world's most valuable brand. Apple's brand awareness enabled it to produce $386 billion in trailing 12-month sales as of late March, accounting for little more than half of the smartphone market in the United States last year. As of today, Apple's $2.3 trillion market capitalization is equal to 11% of the United States' 2020 GDP and is comparable to that of the United Kingdom. Apple has a large economic moat that locks customers into its environment. It has built a solid following for its goods and often launches new ones. This results in more dependability for investors and a very long-term business for Apple, independent of economic conditions. Apple is the ideal company to sit atop the Berkshire portfolio for Buffett, who seeks for firms with wide and long-lasting moats. Although Warren Buffett regrets not investing in Google and Amazon, he will not make the same mistake with Apple. After initially investing in Apple in 2016, the iPhone maker is now Buffett's largest investment, With a whopping 250 million Apple shares, Buffett stated on Saturday, at current rates, his Apple stake is worth around $46.3 billion. But during the annual Berkshire Hathaway meeting in Omaha on Saturday, Buffett was pressed on how he came to be so optimistic on Apple after notoriously shunning tech companies for the majority of his investment career. Warren Buffett bought Apple after hearing about a buddy who had lost his iPhone. According to a Berkshire Hathaway executive, abandoning the gadget in a cab was like losing a piece of his soul. Buffett saw that the iPhone resembled Kraft macaroni and cheese rather than a computing device. According to a new book, Warren Buffett owes his amazing Apple investment in part to a friend who left his iPhone in the back of a cab. Buffett's Berkshire Hathaway director David Sandy Gottesman experienced a tragic loss when his iPhone fell out of his pocket during a cab journey in 2016. "I felt like I had lost a bit of my soul," the nonagenarian told Ted Weschler, one of Buffett's subordinates and a lifelong Apple supporter. The story is told in Wall Street Journal writer Trip Mickle's book, After Steve: How Apple Became a Trillion-Dollar Company and Lost Its Soul. Weschler told Buffett Gottesman's story, and Buffett was startled to find that one of his pals was so obsessed with the technology at his age. The Berkshire CEO, who famously avoids technology businesses because they are beyond his area of expertise, decided to check into Apple. Buffett noted how hooked people had gotten with their devices, even his grandkids on their monthly Dairy Queen visits. He judged that the iPhone was and will stay vital to many people for a long time. Mickle wrote in his book, he realized that Weschler was right. The iPhone wasn't tech. It was modern-day Kraft macaroni and cheese. On Tuesday, Warren Buffett's Apple holding reached a new high of $139 billion, as the iPhone maker's shares finished at a new high of $157. The renowned investor has more than doubled his investment in the technology firm, however has lost an estimated $6 billion by selling his stake. Buffett's Berkshire Hathaway spent around $36 billion between 2016 and mid-2018 to collect more than 1 billion Apple shares. After adjusting for last year's 4-to-1 stock split, it reduced its stake by 12% to 887 million shares by the end of 2020, and that amount remained constant as of June 30 this year. The billionaire investors firm made around $11 billion from Apple stock sales alone in 2020, plus another $2 billion or so from sales between the third quarter of 2018 and the end of 2019. However, if Berkshire kept its investment, it would be valued at $158 billion today, or $19 billion more than it is now. Take away Buffett and his team's nearly $13 billion payout, and they may have missed out on $6 billion in unrealized profits. At Berkshire, Weschler had already acquired a $1 billion investment in Apple, but Buffett plowed another $35 billion into the company over the next few years. Since then, the conglomerate's investment has more than quadrupled in value, reaching $133 billion. Today, Apple is by far the most valuable stock in Berkshire's portfolio, and Berkshire is Apple's largest individual shareholder. Following the Berkshire Hathaway annual shareholder meeting over the weekend, Warren Buffett revealed details on a significant Apple stock purchase made by his company lately. Buffett also stated that if the price is good, he will continue to acquire as much Apple as feasible. Moreover, Apple shares fell from mere $180 highs in early March to $150 by mid-March. Buffett admitted to CNBC's Becky Quick that Berkshire Hathaway acquired $600 million in Apple shares after it fell for 3 days in a row. Notably, he stated that if the price had remained low in Q1, he would have continued to purchase. However, by the end of March, it had risen to about $180. Buffett also backed Apple's stock repurchase program, which was recently raised by $90 billion during the company's earnings call. Surprisingly, following Buffett's $600 million Apple acquisition in Q1, Apple shares have slid back to near March lows. If Berkshire's purchase range is $150, the conglomerate may be buying additional shares right now. In contrast, Buffett revealed last year around this time that Berkshire sold about 10 million Apple shares, conceding that it was probably a mistake. Outside of ETF and other funds, Berkshire Hathaway is the largest single owner of Apple stock. Apple accounts for 47.5% of Berkshire's interests, with a market value of little under $160 billion. That's all we've got for you today. What are your thoughts on this? Let us know in the comments section down below. If you liked and found today's video fascinating, please give us a thumbs up. Don't forget to subscribe to our channel and click on the bell icon to be up to date with the most exciting things as soon as it's released. Thank you for your time. See you in another video shortly.